What's up, guys? John Johnson here again for another episode of Real Estate Keys. And of course, I got my man Joe Falla back here once again. And today we're going to talk about credit, right? We hear a lot about credit. We hear about student loans and how they can impact your buying power and possibly be removed from your credit with these grants that are coming out, right? But we also hear a lot of advertisements about how you get mortgages for as little as a 550 credit score, 580 credit score. And I kind of want to get to the bottom of it. So I brought in Joe to kind of talk to me and talk to you guys about what does that truly mean? Is it even doable? Is it realistic? Is it a bait and switch? Um, Joe, talk to me, man. What's this? For as little as 550, 580. What is that? Is that a scam?
No, it's not a scam. First of all, hey everybody, Joe from Joe Does Mortgages. And also, we don't really have official title for the show as of yet. And I really like what you just said. I'm not sure if you noticed it. I like real estate keys. Can we make that the official name?
Ladies and gentlemen, that's going to be the official name because Joe said so.
And I just looked it up on YouTube. There's no other shows by that name. I looked it up real quick as you were talking.
Done.
Done. Let's get the LLC done. Let's get the patent. Let's hit the New York, the state up so we can get that
That's
solidified
it.
and locked in. Awesome. So yes. So first of all, I want to just go over the rates starting this week. So as always, I told you guys I like to use Mortgage News Daily. What they provide you is basically what's called an APOR. So this is not what I can offer you or the lender down the block is going to necessarily offer you. This is just an average. They take about 100 different lenders and we get an average of where the rates stand right now. So you guys will be able to see the changes, week over week on the show. So right now on a 30-year fix, on an FHA loan, we're at a 5.38. On a jumbo, we're at 5.35. These are just the most common loans out there. VA, we're at a 5.42. Conventional, we're at a 5.9. And a lot of people hearing talks about these ARM products to try to bring buyers back into the market. Right now, we're at a 5.9. On a 15-year fix, we're looking at a 5.27. So again, this is not my rate or anyone else that I may know, just an average of what the rates are looking at right now. And if you guys want to get this information on your own, you go to Mortgage News Daily. It's a great site. So
Okay.
that's that.
Okay. So
So
we're still around a little under six, a little
we're still under 6. But also one other thing that's I think I mentioned this on the other show. That's also based on a 720 credit score with a 20% down. So even though it says FHA, it's with a 20% down payment. That's how they get those numbers. So it would it will adjust accordingly depending on how much you put down, credit score. There's a whole bunch of different factors to it,
okay.
which ties into the your 550, 580 credit score loans.
Yeah. So for the people that don't have a credit score anywhere near the 720, we're always been we're bombarded with emails, spam, mail for as little as 550, 580. Joe, what is that all about, man?
They are available. It's not a scam. It's all dependent on the risk factor of the bank. So, not to get into too much detail, loans, if you guys loans are what they call scrutinized. So essentially, it's just like someone that has a mom and pop shop car dealership. You buy a car, which is your credit, right? The wholesale, the actual money that's going to be used to fund the loan. You buy it, and then you risk. It's your risk tolerance. You know, am I willing to take someone on that has a 580 credit score, knowing that they've had some judgments in the past or credit cards are at the max utilization, how much of a risk factor am I willing to take um, to offer this person this financing, right? So my bank in particular, we go down as low as 620. We can go down a little bit lower. We have other avenues that we could take, but what we call overlays, that's the only overlay we have. We go as low as a 620. Now, when you go to a bank and they say, hey, just 580, not a problem. Let's make sure you have the assets. Let's make sure you have your liabilities are in place. Um, that's more or less them taking a risk. And what comes with that is most likely a higher interest rate. So if you were to able to, and first of all, my rule of thumb is, and I get a lot of clients, right? Joe, oh, I'm so ready. I got $40,000 to put down. I've been at my job for over 2 years. I make 100 grand a year, but my credit shot. That is not a problem. I can't make any guarantees, but it's not normally a problem because you normally can't. If I tell you, you know what, you're making $55,000 right now, in order to buy that dream house of yours, you need to make at least $120,000. Someone, the chances of someone going from a $55,000 job to $120,000 are pretty slim, right? Depending on the type of industry that you're in. Um, so that's slim. Assets. So if I tell you you need, 35,000 to buy this house, and you've only got 5K in the bank, you know, with the way inflation and everything else, the rising prices of everything going on right now, it's going to take some time. It could be done if you budget yourself. You could watch the budgeting video that I uploaded last week. Budget yourself, but it's not going to be overnight, right? You're probably going to have to stay in that rental for another year or 2 years in order to come up with that $30,000. Um, but credit can be fixed. Sometimes it could be just misinformation on your credit. It could just be a matter of bringing down your credit card debt. Um, I've done it myself. You know what I mean? I've been in situations in my past. But just paying half down on a credit card, just you'll see it'll shoot up 15, 20%. But credit can be fixed. So I think it's more beneficial. You can get that loan at 580, 550, but you know what? It's gonna, like I said, the interest rate's gonna be according to that.
Right.
So where if you went ahead and you fixed your credit and you brought yourself from a 650, I'm sorry, a 550 to a 650, you're looking probably a difference of maybe 150 to $200 difference on your mortgage payment
Okay.
just
So
by having a professional, or even I can help you. We have some analyzer tools. I'm not a credit repair specialist, not a financial advisor, but we have some tools in house that we can help you get to where you need to be.
okay. So as with everything, you don't get anything in life for free, right? So there's
Nothing is
always
free.
going to be
Nothing is free.
a price to pay with that lower credit score, and it can be very expensive.
Correct. Because you're a risk factor. At the end of the day, you're a risk factor for the bank. Now, can they get um, can they get, when they go out and they sell these loans out in the open market to investors, that 700 credit score is going to be much easier to sell to an investor than with someone on a 550 to 580 credit score. So
Okay.
they have to present to the investor the opportunity.
Okay. So let's hang on that thought, that concept. So just because a buyer is working with, let's say, you
Hmm.
to get a mortgage and get approved to buy a home, that doesn't mean you are going to be there for them to accept payments and all that other stuff. You're just there to put together the mortgage. That mortgage is a product essentially
Hmm.
that can be sold to another bank, another investor, so they can make
Correct.
money off of it.
Yes. So we make us. Every bank does it. 95% of the banks use the same method. Every day. So they make a spread. They make a initial. They'll make an initial, a spread, or a commission, if what have you,
Mhm.
from selling it out in the open market. It's basically bundled in as a package, as a mortgage-backed security, and then sold out into the open market.
Okay. And just to clarify for our users in regards to the lingo we're using, so your mortgage is a loan. That loan can make money for other banks. So Joe and his company will create that loan by getting you approved and getting you qualified to purchase that home. So that mortgage is considered a loan. So
Correct.
what Joe's company may do is take your loan along with other loans that they have been able to successfully put together and sell that to another bank or another investor for a fee, if you will.
Exactly. And
Okay.
sometimes you'll still get the actual bank. to be your assistant
Hmm.
um, on the loan, but most times, depending on the business model of the bank, sometimes it'll be Bank of America, Citibank, Cross Country Bank, right off on the initial statement, but a month or so in, you'll get a letter in the mail. By law, they're supposed to send you something that your loan has been sold or moved to a different institution.
Okay. Okay. So let's get back on track with credit, right? So we talked about the price you can pay with a lower credit score, how much easier it is if you have a higher credit score. Joe, what
Mhm.
are some of the things that you assist these buyers with in bringing their score up without them having to pay for all these credit repair services that are out there?
So we have a system in house. We work alongside with the credit company that we use to run the credit with, and it has an analyzer tool. Very simple. It pulls the report that we've pulled for you, and then we use the analyzer tool to actually adjust it. So if you have a credit card, let's say you have three credit cards and two of them are below 20% and one of them is at 80% utilization. So we can use the analyzer tool. It's just a basic scale, and we'll actually lower it. We'll say, okay, so if this card's at $8,000, the limit is 10, and we brought this down to 2,500, it'll automatically tell you exactly how much your credit will boost up over a month or 60-day period.
Okay. Now, is it wise for someone that's looking to purchase a home? Okay, they've consulted with you. You know, you run their credit report. You're sharing, how much debt they have across different accounts. Is it wise for someone working with you or someone looking to purchase a home to go in and just pay off accounts and close them out? This way, they don't have as much debt.
You mean credit cards?
Yes.
Never, ever, ever close a credit card account. It doesn't matter how much disdain you have for the company or what bad customer service, that is part of your credit profile. The history you have on that credit card is part of your profile. Off the top of my head, I think it's about 10 to 15% um, of your actual total credit score. So if you've had issues with a credit card, my suggestion is pay it off, cut it, throw it in a safe somewhere, throw it in a drawer where you don't have easy access to it, but never ever cancel a credit card unless it's some sort of fraud that may have happened to you where you didn't apply for the card or what have you. But never ever cancel any cards.
Okay.
Um, I learned this the hard way for myself. Um, Again, I'm not a financial advisor. Do not close any finance of vehicles sooner than the term. So I had a car from my mom, and unbeknownst to me, it was only about $3,500 left on. I said, yeah, we might as well just pay it off. Right? I did the math. It made better sense to just pay it off because the rate kept going down as we were paying it off. Um, and next thing you know, my credit went down like 15, 30 points within 30 days. And I forgot what drove me to think of the actual company. So I called Honda, which is the company we finance, Honda American Financial, and they said, "Oh yeah, if you close it before the end of the term." So that actually hurt me. But my credit was in pretty good standing, and it just bounced back within a few months.
Now, Joe, what you just mentioned is a gem. Gem alert, people, because you figure, well, let's just talk about it. A lot of people got cars during COVID.
Hmm.
Okay,
High
so
payment cars.
yeah, yeah, high payment cars. Some people got a boost in paying those car balances down, so they're probably maybe a year or two out from paying them off. And
Hmm.
you just put me onto something that I didn't even know. You're saying pay the full term because if you pay it off earlier, you can possibly lower your score. That I did not know.
I did. I learned the hard way. And I believe it works a little bit different for leases because I like to lease, and I never hold my cars to the full 36-month or 39-month term. Works a little bit different for leases, but on a finance, it's a little bit different. And I think what happens, again, this is just me guessing. Um, I think what happens is that when you buy a new car and you don't hold it to because everyone trades in their car all the time. 4 years, the car starts to little wear and tear. You want to get the newest model. Usually, every the new model comes out with every 5 or 7 years. And when you're doing the transaction, your credit is taking a hit anyway because they're checking your credit to actually get you into the new vehicle. So it kind of washes itself out. So that's how you may not notice that happen. But I wasn't getting anything. I was just paying off the car completely.
Wow. Wow. Gems. Gems, people. So never cancel a credit card because there's history
Refinance
behind it.
is a good idea. Like if you've
Okay.
taken a car out, during COVID, a lot of people were refinancing their vehicles when interest rates were lower. So if you had something at, 10, 12%, you could probably get it cut down in half. But unfortunately, those times are gone.
Yeah. Yeah. Wow. Okay. Okay. Two very, 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 very good recommendations and suggestions. So now we know we're not going to close out our credit
Any credit
account
cards.
because there's history behind it. We know we should go for the full term of our auto loans or refinance. Now, let's talk about.
Well, I'm sorry, while we're on that topic,
Mhm.
also, some people have always asked this. If you have a finance vehicle and you only have 10 payments left, we will actually we will actually remove that from your DTI. So when we're figuring out how much affordability you have, if there's less than 10 payments left on a finance, not a lease, on a finance, we will actually remove that payment from the math that we use to see how much you could afford.
Okay.
And we talked about this on a prior video as well, if you wanted to see what exactly the DTI and how the math works.
Okay. That's another gem, people. You have less than 10 car payments. Mortgage company will not count it against you as far as your DTI or debt to income.
And that's a good strategy. If you got less than 10 payments and the car's, it's on its last leg for whatever reason, hold off some time. Hold off until you get the mortgage, then trade in the car or, do whatever it is you need to do because it's not going to count. Because if you do it right before you try the application or you do it while you're doing it in the middle of the application, which you should never run any sort of credit while you're in the process of a mortgage. That's also a gem. Never ever credit card, doesn't matter what the case may be, you are going to ruin your file unless you have an 820 credit score. You are going to ruin your file. Not only are you lowering your credit by running it, doing a credit check on there, the underwriter is going to be is when because we run your credit twice. We run it on the initial application, and we will either do a soft credit check just to see what's gone on since the 5 months since you originally applied for the loan, um, just to make sure nothing has changed since.
So Joe, I think that's our last talking point, right? So to those of you that work with myself, my team, Joe, his team, when you interact with us, okay, you're pretty much going to be detained and you're going to be taken to credit prison based on what Joe just said. Okay, because there is that notion or myth that, hey, well, as long as I got my pre approval by speaking
Whew.
to the likes of a
I
Joe,
need furniture. We
yeah,
got to go look
yeah,
paint. Home Depot, zero interest for the first year.
yeah,
Bob's Furniture, no interest for 36 months. It's
yeah,
all a lure. It's all a lure. And
right. And people, pay attention. Like, just because your credit was ran to get the pre approval does not mean the lender will not run your credit again. And Joe, can kind of go into the reasons why credit can be ran multiple times between the time you issue that pre-approval up until closing?
well, most lenders will run your credit every 3 months after the application. Um, I remember a woman I spoke with a she was working with a different bank, and they kept pulling her credit every 3 months. They already had authorization. She's given authorization for them to pull the credit on the initial application, But they kept running the credit every 3 months because she was still in the process of finding out she was not finding the house she wanted, or she wasn't getting her offers accepted. And they just kept pulling it. We don't do that at my bank. We'll pull it on the initial application, and then we will pull it again, either a soft or a hard pull, um, right before we go to closing, like a week or so before. We want to make sure that the liabilities, your car payment, your credit card payments, your student loans have not changed because we're using those factors to qualify you for the loan. So if during the loan process you decided, that Honda Accord wasn't good enough, I got to raise up my job. Um, I know a guy at the Mercedes dealership, and now you got an $850 payment on this new Benz. That may actually disqualify you. And you're hurting. And on your side, John, you've already given it. Most likely at this point, you've probably already given an initial deposit down, earnest money, and you can speak better to that. There could be cases where you can't get your money back.
Right. There could be cases where it's so late in the game in the transaction, depending on how the deal is structured, you might have to forfeit your deposit. You probably already paid for a home inspection. You probably already paid for an appraisal. Who knows what other inspections you've paid for? Not to mention your time, which is probably more valuable than those previous three. You've now thrown it away because you felt, you know what?
I
I
deserved
want
a
to
reward.
yeah, I want a reward, and I'm gonna go to closing in my brand new car, and from closing, I'm gonna go to my brand new home. Well, guess what? Like Joe said, your credit's going to be ran a few days before closing to make sure you are still financially able to purchase that home. That's why we call it credit prison.
It wasn't my fault. My husband, my kid took my information and they applied for a credit card.
Nope.
There's no takebacks. There's no rewind. There's no time machine that can fix that.
Damage is done.
The damage is done. Exactly.
If you want the house, focus on the house. The house, then the car. Okay? House,
Or whatever the vacation to Tahiti, that stuff can wait. What's more important is setting a mortgage payment that will stay the same for the length of your loan, for the primary length of your loan.
that's pretty much it. Joe, gems, man. You drop gems. We ran out of time again. So that means we
Oh
just got to keep
man,
doing it, man. We got to keep doing
absolutely. Just keep providing the information,
it, you know?
free information, free information.
Free every week, people. Real estate keys. That's it. You go
Real
to
estate keys,
YouTube,
I love it.
search under real estate keys. We are here. Joe is here. His team is here. My team is here. Joe, I thank you again, man.
Appreciate it. Again, if you want some more free information, some great information, I can be contacted on the hotline 908-669-9091. You can DM us on any of these platforms: YouTube, Facebook, Instagram. Always available help, free consultations. Um, it's always possible. It's always possible. You just need the right lender and the right information to get the job done, and the right real estate agent as well. It's about getting the team.
Ladies, gents, children, because we got some young hustlers watching this as well. We got all the info in the description below. We thank you for joining us for yet another episode of Real Estate Keys, and we will see you guys next time. Enjoy,
Bye
people.
bye, everybody.